Metro, come here. Yo, what's going on, guys? Welcome to day 2 of the Forex Masterclass. If you guys are on Instagram, comment ebook for me. Comment the word ebook for me, EBOOK. Comment that below, and I'll send you guys an ebook that I just made. So if you're on Instagram, comment ebook. We are going to get started with day 2 of the Forex Masterclass. Let me share my screen with you guys. So we are on day 2 of the Forex Masterclass. If you guys do not know, I have been going live on Instagram and YouTube at 5 p.m. PST every single day, and I'm teaching you guys how to trade Forex as a complete beginner. Here is the Masterclass Orientation. And if you guys are watching this from Instagram right now, comment ebook. Comment ebook for me. It's just EBOOK. Comment that if you are watching from Instagram. So this is the Masterclass Orientation. Class starts every day, Monday through Friday at 5 p.m. PST, 8 p.m. EST. Do not be late. Secondly, be prepared. A pen and notebook is needed, guys. Do not be lazy. You're going to want to write down everything that I'm teaching you guys. Thirdly, join on a laptop. Your phone screen will not give you the full experience. So if you guys want to maybe shift to YouTube real quick, my Instagram or my YouTube is just Colt Most Def, and you guys can watch it from there so you guys can get a better experience. Or if you guys log into Instagram on your computer, you guys will be able to see it and have a bigger screen. So once again, if you guys are on Instagram right now, comment ebook for me below, EBOOK. Third or fourthly, get ready to learn and make some money from trading Forex. So welcome to day 2, everyone. We are going to go over a couple of important things. Yesterday, we kind of went over the basics of Forex, what it is, how to get started trading, all that good stuff. Now we're going to go into actually the juicy information, like the real important stuff that nobody's really talking about. So when we trade, there's something called using proper risk. And that's simply making sure that we're not over leveraging our capital, because we don't want to be risking the full amount of our account, 50% of it, 25% of it. Guys, when I am trading, I'm risking 1 to 3% per trade. If you're an aggressive trader, you may be risking 5 to 10%, which is a lot, to be honest. So on the left, we have this lot size chart. And all I want you guys to do is either take a screenshot or write this down. If you write it down, you're going to be able to retain the information a lot better. So on the left, we have this lot size chart. And this is basically the lot size that we're going to use for our account size. So if we have $100 in our account, our Owanda.com or Forex.com account, and if you guys go to, I showed you guys this yesterday, but I'm going to show you guys again right now. If you guys go to Forex.com, you can actually open up a demo account right here, or you can open up a trading account. So if you go there, you can open up a trading account and actually start practicing. So if you go to Forex.com or Owanda.com and you fund your account with $100, you'll do a 0.01 lot size. $200, 0.02, 300, 0.03, 400, 0.04, 500, 0.05, and $1,000, 0.10, a 10-cent lot. So when we're actually trading, we have to measure the risk that we're going to be risking per trade. So the first thing that you want to do is you want to get your account size. For this example, our account would be $10,000. Secondly, you want to figure out the risk that you're going to risk for that trade. Are you going to risk 1%, 2%, 3%? And if you guys are on Instagram right now, comment ebook for me. I'm going to put it in the chat for you guys. Just comment ebook, and I'll send you guys a document that I made that has all this information compiled in it, so you can just go through that and start learning how to trade. So we need to get our account size, $10,000. Then we need to figure out how much we're going to risk, 1%. 3, we need to calculate how big our stop loss is going to be. Let's say we're using a 10 pip stop loss on a $10,000 account with a 1.00 lot size. We'd be risking $100 per that trade or for that trade. Then fourthly, a pip is simply a measurement in price when the market goes up or down. So if we go to the chart right now on tradingview.com, you guys can see to the right where it says 1.24267. That is the current price of this currency pair, GBP USD. So as it goes up and down, you can see that the price is changing. So if you go to this little ruler, you can actually measure and it will tell you how many pips that move is. So from right here to here, it's a 6.9, almost a 7 pip move right there. Now let's go back to the presentation. So let's go to the next slide. So understanding pips. A pip is a measurement in price. The market goes up or down 10 pips, 20 pips, 30 pips. So if you use a 10-cent lot size and catch 100 pips, you will make $100. So this is a depiction on what it will look like when you actually enter a trade on TradingView. You can see the stop loss is 46 pips, take profit is 133 pips. And let's actually go to the chart and I'll show you guys that. So right now we're on GBP USD. Let's say that we think the market is going to go down. On the left side where it says forecasting and measurement tool, you will click long or short. Long means that we're buying, short means that we're selling. So if we go to long, we'll place it at the current market price. That's where we want to buy at. And then this little box down here, this is our stop loss. We can adjust this. We can move it up or down. Now notice how the numbers in the middle of it are going to change as we pull it closer, or they're going to get larger as we pull it further. Those are our pips right there. So if we have it right down here, that's 13 pips. And then up here is our take profit. If we drag it up, the pip count will get bigger. If we drag it down, it will get smaller. So if we drag it all the way up to this point right here, this previous high, it's 44 pips. So when we are trading, guys, when we put our take profit and stop loss, the market is either going to go from where we enter at this current market price. It's either going to go down to our stop loss. And when it hits that stop loss, it will automatically take us out of the trade. Or when it goes up here to our take profit, it will automatically take us out of the trade with profit. Now, our stop loss is kind of like to protect the order. We don't want the trade to shoot down a really large amount and make us lose a lot of money. So with our stop loss, if it's right down here, so look, let me explain it. Stop loss is 13 pips. TP is 44 pips. If we use, on this trade right here, if we use a 1.00 lot size, if it goes to our stop loss, we're going to lose $130. But if it goes to our take profit of 44 pips, we are going to make $440 on this trade right here if it goes up. So this is kind of how to like read the charts and understand what we're going to do when we're buying or selling. So this is like the graphic depiction I just showed you guys on tradingview.com. The next thing is this measurement tool, and I'll go back to the chart and show you in a second. So when we're measuring a move, here's an example. If the currency pair GBP JPY, the Great British Pound versus the Japanese Yen, if it goes from 191.000 to 192.000, that is a 100 pip move. So you can see I have this chart example right here from 191.360 to 193.3538. That is a 217 pip move. So we have on TradingView this measurement tool that will help us define the measurement. So if we go back to TradingView, if we go to this ruler right here, we can measure from current price to where we expect the market to go. and it will tell us the amount of pips that move is going to give us. So this measurement tool is cool. You can kind of like measure previous moves. You can see where it went to in the past. It's a cool tool to just show you how many pips are from this point to this point. That's how you use that. And if you guys are on Instagram watching this right now, comment ebook. Just type in ebook below, and I'll send you guys an ebook that I made. It's just EBOOK. Comment that below. So this is how you would enter a trade on MetaTrader 4. So on TradingView, it would look like this. You would put your long position or short position, whatever you're doing, whether you're buying or selling, and you would have your take profit and your stop loss. Now I messed this picture up. The red numbers are actually my stop loss, and the green numbers are my take profit. So you can see on MetaTrader 4, right here, I'm looking at GBP/JPY, market execution. You would choose your lot size that you're doing, and I went over the lot size right here. So these are the lot sizes you would be doing for your specific account size. So you have your lot size and then your stop loss and take profit. So the stop loss is 190.156 right here. Take profit 193.948, 193.948, and then you would click buy if you're buying or sell if you are selling. So when you're on MetaTrader 4, when you are in a trade, you can actually close the trade manually if you don't want to wait for it to hit your take profit or your stop loss. So if you hold down the position that you are in on MetaTrader 4, you can actually close it with the profit or loss at any point in time. Then once you get to this, after you hit the close tab right here, it will take you to this screen, and you'll click close with loss or profit on whatever it is. So that is what I wanted to go over with you guys today on this call. If you guys want, you can go to tradingview.com after you open up a demo account. So if you guys go to forex.com, you can open up a demo account. Then you guys can go to TradingView, and you can look at a currency pair like GBP/USD, and you can kind of go and set up the chart. So if we go to like the 5-minute chart, you can see that it's been dropping for the past like hour right here. So if it's already going down, it's most likely going to continue to go down. So you can go and put a short position, have your stop loss up here, and then you could have your take profit down here, and then you'll get your stop loss right here and your take profit right here, and you can go and enter this trade on MetaTrader 4. So it's important that you guys kind of go and mess around and apply the information that I just gave you. Before we get off here, if you guys are watching on Instagram, comment ebook for me. EBOOK. Comment ebook, and I'll send you guys a file that I just put together that'll show you all this information. All right, guys. I will see you guys later on. Tomorrow, same time, 5 p.m. PST. Do not be late, guys. I'll see you then.